energy and the crisis thereof seems to be the talking point all of the last few days. You open BloombergQuint.com, open Bloomberg.com, and all you see are stories around what's happening on the energy space, be it China, be it Europe, be it even Russia for that matter. Thankfully, the way the situation is being managed in India is pretty admirable. The questions, though, today to our guest are as much about his company as it is about the sector. And Prashant Jain of JSW Energy Johnson right now. And Prashant, thank you so much for joining and agreeing to do this, because we want to talk to you as much about JSW Energy as it is about the space at large. I hope all is safe.
All good, all good. Thank you for having me here.
And the pleasure is ours. Prashant, can you talk a bit about how do you see this current energy crisis, if you will? Every day I hear reports about how there is going to be a shortage when the winter hits the rest of the world on natural gas. There might be a switch to oil, and oil prices might move up. Power is in shortage across various places as well, and could be exaggerated as the winter comes in. And then juxtapose that in the Indian context as well for us.
So there are different problems in Europe and different problem in China. If I talk about Europe, typically what has been happening is the generating companies are primarily the trading companies which had locked in their power sales contract for a year and two, but they did not lock in the natural gas prices because they were subdued after the pandemic. And suddenly what started happening is that the natural gas prices started going up, and then they went into the bankruptcies and could not honor the contracts under which they were selling the power. And suddenly there was a power shortage which was on the anvil, and then we started seeing prices going up. So that is precisely happening in case of Europe and Russia. And now, because of the oil hitting at $79, natural gas going up more than $20, $24, the prices of power has gone up. So that's one problem which is happening in the Europe. Second problem which is happening in China is China has been cutting on the emission targets, and then now the provincial governments are coming very heavily on the thermal-based power generation. That's one problem. Second problem was between the China and Australia. They have started reducing the trade, and then they are less importing coal from Australia, and they were more dependent on Mongolia, but Mongolian mine throughput could not come up more, and because of which the thermal coal prices have also gone up, and because of which power shortage is looming large in China. But there is a third element which is also playing, is that is the economic activity. You have seen the fixed asset creation in between 2003 to 2008 time, and at that point of time a lot of power capacity was built up. But from 2012 to 2020 there was no meaningful power capacity was built, and now the economic activity is reviving globally, and also a lot of new capex is coming up. So that is also a function of the new incremental power demand. So power demand is also going up because of the fixed asset creation and capex, and then GDP revival. And so two things are acting together, and that's what you are also seeing in India. Now Indian power prices are also, they have shot up. Now the peak power prices are between 15 to 20 rupees. The power demand for the first 8-9 months or say 6 months for the current financial year is up by 14-15% year on year. So it's pretty good.
Do you think any of these global issues could impact India? I was listening into an interview from Coal India, wherein they were saying that the demand for, and we'll get to your individual company in a bit, Prashant, but just wanting the big picture. And they were saying that the demand for coal has shot up. They might not be able to meet the targets set by the government or internally as well. They might fall slightly short, and they are trying their best to make sure that they are able to meet or match the output to the kind of requirement there is. What's the situation on ground in India?
So India produces close to 550 to 600 million ton thermal coal, which is being produced by Coal India and its subsidiary, and close to 150 to 200 million ton of thermal coal is imported. But as you know, the imported coal prices have shot up to the roof. Now the index is running at $175 to $180, and it becomes very, very difficult to import at that price, because the variable cost at that price itself is more than 5 rupees. So so imports are happening less, and then there is a more pressure on demand from the domestic front, which Coal India will not be, or is finding it difficult to meet the demand, and that's what is happening, and that is what is reflecting in coal shortage and also the power shortage going forward. So that's what is happening. And as I said, that there has been no investment which has taken place in India also for last couple of years. And another side which I have said about is the demand is also another side is going up. So all put together, there will be a need to make more and more investment in the power sector in India.
Yeah, and you are doing that too, and I'll come to that. But just one quick follow-up question, Prashant. Global coal prices, as you said, have moved up. India, I don't think the prices were revised for the last 2, 3, 4 years. WPI itself has inched up in the last 3, 4 years by maybe 15, 20%. The Coal India guys are hopeful that there will be a price revision, maybe to the tune of 10%, maybe higher. Were that to happen, could it put pressure on power producers? Even though I know a lot of you are now identifying yourselves, and rightly so, as future renewable powerhouses, as opposed to being thermal power producers. But currently, I believe there could be a larger proportion on the thermal power side, any which ways for you and for others. Would it disrupt the party a little bit, or no, not quite?
It will be other way around. I will see, look at whatever Coal India produces, they sell power, that coal in under the long-term linkages. And under that long-term linkages, the fuel prices pass through. So the consumer will be paying higher power price as and when the Coal India increases the coal price. So if there is an increase of 10%, then you are talking about 25 to 30 paisa, the power price will go up for the power producer. So as of now, the average tariff of the thermal power plant is close to 4 rupees delivered to the DISCOM. Now that will inch up by another 25 paisa, and that will make even more compelling case for renewable people to shift from thermal coal to renewable power.
No, which I agree completely in the long term. In the short term, for the power generated, would the cost going up be a problem, or would it be a pass-through?
It will be passed through, because entire thermal power plant space is from the Coal India is operating under a pass-through model.
Okay, now, so Prashant, I'm guessing one final question on this piece before we move to JSW Energy. You don't reckon that this global energy issues that are at hand for different reasons for different continents and different countries will have a very, very jarring impact on the Indian landscape, do you? Except for the fact that it pushes more people into renewables, but you don't foresee otherwise a big jarring impact for consumers or for producers in any fashion?
India is going to see its own problem of power shortage. So we are going to see the power shortage, which I have been talking about for the last 2 years, that India is going to see a power shortage in time to come, because not sufficient investment has taken place in this particular sector in India. And now the GDP is growing, and then you are hearing from everybody that every company is increasing their capacity. If they are increasing capacity, they are going to increase their power demand. And now that power demand has to be met by the power producer. So new fresh investment is required. Point one. Point two is you need 3 times the power capacity as compared to what you have been seeing in the past, because the incremental demand will be met by renewables resources, because nobody is going to set up a new thermal power plant, because point one, it is expensive. Point two, nobody is going to fund, no bank, no investor is funding that kind of assets on the ground. So it doesn't make any rational. So for 1 megawatt, you will be setting up 3 megawatt capacity. So if you are talking about 10,000 megawatt of incremental power demand, you will be setting up 30,000 megawatt of the incremental capacity. So huge capital expenditure in power sector will be seen in time to come. And until that happens, you will be seeing some sort of a higher elevated power prices for some more time.
You reckon that could be a longer period than what people might currently envisage? I don't think too many people are even cognizant of the fact that there will be a power shortage for a considerable period of time. How long do you think this may last, and by when do you think we enter into that period of perceived power shortage? Because the capex plans from India Inc. are very strong and getting announced by the day.
I can give you a color that nowadays every week there is a power ministry from the central government is reviewing the coal situation, power demand situation, and supply situation, and talking to the all power generators that how to enable them to make their power plant ready to supply to the grid. So that's the kind of a grave situation you are seeing on the anvil, and then it's going to remain like this for a couple of months or a couple of quarters.
Got it. Prashant, does that give you a feeling that the good days for power producers might be here? We've seen a couple of false starts in the past, right? Wherein the belief was that India is such a power, or actually not the belief, the reality was that India was such a power deficit country that any company which sets up a power plant will eventually make money because there is no dearth of demand. But somehow, maybe due to policy lacuna or wrong kind of bidding, what have you, we've seen a bunch of your peers get into trouble. You were not a part of that gang, but some of the others have been. Do you see the power sector as a space past that hump, or do you believe that it will only be select companies which might actually see the really good days, because only few companies are prudent, not every company is?
So, Neeraj, there are the two things which is very, very important, which this sector needs to be understood very differently than the normal industrial sector. This power business is a kind of an annuity business, and most of the people who face the problem because of two reasons. One is they expected that the power prices will remain elevated, and then power can be sold in the merchant market continuously, and they can make a lot of money. What you saw in 2005 to 2008, there was a lot of money on the table, and because of which a lot of capacity came up. Now, that's not the case in case of the power, because once you build the capacity and after that the power prices normalizes. So it's a annuity cash flow business. So one needs to be prudent while building the capacity, and that's what we did when we were building. The second thing which is important also is that you have to be very, very capital efficient when building the such kind of a power plant, because you spend the entire capex on the day one, and then you are getting the annuity income for next 25 years. So if your capital allocation is not prudent in terms of the gross block per megawatt, you are investing more money to generate per megawatt of power, then you could be having the pain for the entire 25-year cycle. So these are the two things which are required to be kept in mind, and this is what JSW Energy has done very differently as compared to over years.
That's true. So tell me, this aim for reaching 10 gigs by FY25 and 20 gigawatts by FY30, is it prudent, is it ambitious, or is it realistically ambitious?
Okay, so I will call it is conservative, and I will tell you how. So look at why we talked about a 20 gigawatt by FY30, because like Indian power demand will be growing close to 5-6% on a conservative basis, what it has grown in last 20 years time frame. And if that is the situation, then you are talking about close to 10,000 megawatt of the incremental power demand every year, and which needs to be set up by renewable resources. That means you are talking about 30-35 gigawatt per year. That means in next 10 years, 350 gigawatt. So out of 350 gigawatt, if we are talking about only 15 gigawatt, then we are talking about less than 4% of the total incremental size of opportunity. That's point number one. Point number two is that we generate free cash of close to 2,200 crore, with which we can set up incremental capacity of 1.8 to 2 gigawatt every year. That means if I want to add 15 gigawatt in next 10 years time frame, then I don't need any fresh equity, and my balance sheet will remain still under-levered because I am using my internal cash flows to do that part. The third thing is that we have also locked in our resources of close to 20-22 gigawatt in our hand, and then the turnaround of the asset in the renewable sector is 8 to 12 months time frame. So building a capacity of 1.8 to 2 gigawatt is very, very easy. And if you have that kind of opportunity and that kind of a land bank and resource sites with you, then all these things put together, we can do that. If we want to accelerate, if the economic environment is good and we want to do that, then that is also possible. So, but on all estimates, from the execution point of view, from capital allocation point of view, from the percentage of the size of the opportunity point of view, it is a very conservative estimate.
You reckon that if the economic activity picks up with all that the government is trying to do and the natural bent of the cycle, that you have the elbow room to be able to substantially expand in the near term the capex plans? Do you envisage that at all?
If all is true what you are talking about, and if we are getting a good returns, then we can.
Well, define good returns, Prashant.
So good returns defines is that on a conservative estimate, we should be making mid-teens returns. So that's how we define.
Okay. Now, okay. There is one more aspect, Prashant, which was very interesting, and you've kind of taken the lead in that. At least that's what people believe, right? This whole potential for green hydrogen. Now you've signed this agreement. You probably at the forefront here. Tell us about the possibilities thereof, and then I'll move on to a couple of other questions that I have with regards to that.
So green hydrogen is a new oil, new opportunity, which is going to replace oil in time to come. Because if you know that a decade ago when the world was moving towards the electric vehicle, at that point of time there were the two technologies on which the world was working. One was the hydrogen fuel cell, another was the electric car. But green hydrogen was pretty expensive to produce at that point of time, because 73% of the power of the variable cost to produce green hydrogen is actually the renewable power. And all of us know that the renewable power prices were very elevated 10 years ago, and today they have fallen 80 to 90% 80 to 90%. And now it has become very economical to produce green hydrogen. And second is that India is the most competitive market in power sector in renewable space globally. The power prices are cheapest in India. So that's why India is best placed to produce green hydrogen economically. And also from the demand perspective, India is a large importer of gas, oil, and also ammonia. So the spectrum of this fuel is imported in India, and that makes a call it for a national need, and it becomes a absolutely new space. And that's where we decided that we would like to venture in this particular space, and I see a great opportunity in time to come. And that's why the Prime Minister is also talking about this green hydrogen mission. He talked about it in his Independence Day speech. He is was in his visit to US. There also he was also specifically talking about it, and then meeting various industrial houses to partner and venture into this kind of a cooperation.
Sure, but just some clarity here. What would your plans entail, Prashant? And I think you also I'm saying there would be some thoughts behind this in a meaningful way, simply because I think you've taken the board approval as well for reorganization of the business into green and gray, so to say.
Both are separate things. One is that we are reorganizing green power and gray power business, which is to unlock the shareholder value. And then we are getting a lot of inbound queries from our investors to look at this kind of opportunity. So board has mandated to undertake a particular study, and then we will be doing that study, and we have already appointed various advisors and consultants who will be doing it in due course of time, and board will be taking a cognizance of that particular report. And as regards to green hydrogen, we are at this point of time doing a detailed work, and very soon we will be coming up with a project. And that project will be to produce both green hydrogen as well as green ammonia. It will be targeted for domestic demand as well as for the export purpose. And that's what we are looking at this point of time.
And do you yourself have any timelines for this reorganization to happen? Because clearly the world seems to be caught up with anything that is got to do with clean energy, green energy. So your multiples that your businesses might get would be very, very different for green versus gray.
So board will be taking a note of the report which we will be submitting, and I think in a quarter or two you can hear from us that what board is planning to do.
Got it. Prashant, last couple of questions. One is, and I'm putting you in a bit of a difficult spot and a micro spot, so to say, but I'm still wanting your opinion. There are very, how do I say, views divided right down the middle when it comes to valuing JSW Energy here on. So nobody doubts, for example, most people are on consensus that your EBITDA numbers between now and say 2030, which is where you announce your plans thus far, would actually grow from 2,500, 2,900 crores currently all the way to between 12.5 to 15, 16,000 crores. So not too many people doubt that by virtue of the execution that you've done. What people doubt is the kind of multiples and the kind of valuation that the business can derive. I want to understand from you, Prashant, when you look at your business and your equity price is your currency as well, so to say, right? Where do you think the sell side misses a trick or two, which the buy side doesn't miss? Because the way your stock is valued currently shows what the buyer is thinking. But the sell side view is arguably that there is a bit of an overvaluation out here. So is it that the analyst on the street is missing a trick or two about valuing power companies in the first place? Not just you.
So I'm not the right guy to answer this question, because we don't value our company or our business that way. And I found it very difficult when our stock price was trading at 40 rupees, and I don't know so what was the reason at that point of time it was trading at 40 rupees. But I really see that there are 2-3 things which differentiate us very from others, and that is my gross block per megawatt to set up a power plant is lowest in the country. My O&M cost is lowest in the country. My interest cost in the private sector is lowest in the country. And my equity IRRs are highest in the country. So that's how I see. And then also our balance sheet is the highly under-levered. So we are less than 2 times debt EBITDA, less than 0.43 times debt equity, as compared to industry, which is 2.5 times debt equity and 5.5 times debt EBITDA. So that's the kind of a thing, and that's where we always concentrate. So you ask me that how will I generate industry leading returns? I will be able to answer you that, and about the cash flow. So that's where we concentrate. But I think the buy side analyst and sell side analyst, they understand their business very well, and then they do it right. And so I never try to question them, and I never try to understand, because I do what I understand best.
Sorry, I didn't mean to ask you that why does a particular set of people don't, kind of, how do they get it wrong? I was just wondering if you believe that when investors globally talk about wanting to invest in your business, I'm sure there are a lot of people who approach you for wanting to invest. Do they look at it from a different prism than what the current way of looking at power companies is?
So I'll give you an example. Like there are a number of companies which are in green energy space, which are globally listed as well as listed in India, and also Indian companies which are having a complete 100% operations in India and listed globally in US. All of them are trading close to 15 to 30 times EBITDA multiple, and that's what is the right now the norm. And I know no one to say that what is right and what is wrong, but that's what is the benchmarks which I am being told at this point of time.
Prashant, Sorry, there's some audio disturbance. We'll just, I think there is one audio link which is open right now. We'll just get that shut. I just have one final question to you, Prashant, and that is, do you see any downside risks to, aside of course, if the capex theme or the capex intensity and the GDP growth doesn't come back the way people are hoping it would, are there any other risks to this whole story? Maybe something that has happened in the past that could reenact or whatever it is. Are there some risks to the story?
So there is one typical risk is about the technology shift. This is what I feel, that I am pretty sure that the power will be required, and so power demand needs to be met, and there can be a shift in the technology. Today we 10 years ago we were building thermal power plant and we were talking about 25-year cycle, and today we are talking about shutting them down, and now we are talking about wind and solar. Probably there could be a technological shift, and then this technology can become absolutely obsolete in 5-10 years time frame, and new other technology comes in. So that's the one shift which I see. So for that, that's why it has to be a very capital prudent strategy for a company to survive this kind of a technological shift. And we are striving that even if we are growing, we will be continue to grow with an under-levered balance sheet. We would not like to lever our balance sheet to the perfection point which some of the companies try to do.
Capital prudence takes care of most things and most uncertainties. So that's my headline for the story, Prashant. Thank you so much for speaking to us today. Lovely understanding from you, lots of nuts and bolts about this space and about your company.
Thank you, Neeraj.
The pleasure was ours. Viewers, I hope this was as informative for you as it was for me. Thanks for tuning in.